Hello and welcome back to the channel. Now look, if you're looking to invest in dividend stocks, you've probably come across two fundamentally major strategies here: dividend growth and dividend yield. Now, which one is going to be right for your investment goals? You will have to work that out, but in this video we're going to look at some of the benefits and the drawbacks of each one, and we'll compare and contrast them to try and help you to make an informed decision. Let's get into it. First, let's talk about dividend growth. This approach is going to focus purely on companies that have a history of consistently increasing their dividends over time. The idea is primarily to invest in companies that are growing their profits over time. As they grow and increase the size of their business, they return more and more of that wealth back to the shareholders through dividends. Now this is going to lead to long-term returns and a growing stream of passive income. So what are some of the benefits then of this dividend growth investing approach? Well, number one, compounding. As the dividends increase, you can reinvest those dividends, and that can lead to compounding growth both in the number of shares you own as well as the total value of your investment in that company. There's also the element there of lower risk. Companies that have a history of dividend growth are often very well established, they're often more financially stable, and this can often reduce your investment risk in the long term as well. And number three, it gives you some inflation protection. Now that's absolutely crucial in this current environment, because the rising level of dividends will actually help to offset the effects of your inflation on your income, particularly if these are companies that are increasing their dividends by 5, 10 or even more than 10% per year. Yes, that's right, you can actually get a raise for doing nothing other than holding the dividend stocks long term. Now that's absolutely very enticing. Now on the other hand, we also have a lot of people who follow the dividend yield strategy. Now this approach really prioritises looking for higher yield dividend stocks, looking for those stocks with an income of around, or a yield of around 5% or perhaps higher. Now the focus here is more on immediate income, and there'll be some examination of the dividend growth, but it's probably not going to be such a big factor in that decision. So while the dividend growth investment stocks might have an investment growth of about, 5 to 10%, when you're looking at dividend yield, you might be looking at stocks that are only going to increase the dividend levels by 2, maybe even 3% per year. Now, in good years, that's going to match inflation. It's not going to keep up with inflation at the levels that we're currently seeing. Now, some of the big advantages of the dividend yield approach then, number one, you're going to receive more income. Now that means more money in your back pocket right now than you're going to get with the dividend growth approach, and that's absolutely useful for you as well. There's also that long-term ability to gain from the capital appreciation as the value of those stocks increase as well, and so you can benefit from both the higher dividend yields as well as the capital gains. Now finally, you can also then take some of that income and reinvest it in other strategies and other assets as well. And so you can take that income and you can compound it over time also. So, which of these approaches is going to be right for you? I can't answer that. The right strategy is really going to depend on where you are in your life as well as your investment goals and your level of risk tolerance. Now, a more conservative approach is probably going to be looking at a long-term dividend growth investing. The dividend growth investing pathway can offer, over decades, a very long-term, slow and steady way to compound your wealth. However, many other people are also looking for a little bit of income now, and so having some money invested in dividend yield stocks is also going to be quite nice. Now, personally, I think from a psychological perspective, seeing some of that income flow in on a regular basis is also a motivating factor to keep on focused on investing, and so often having a balance between these two approaches is going to be useful. It's also important to think about which one of your investments falls into each one of these categories. So you don't want to have perhaps all dividend growth investing or all dividend yield focus, but often having some stocks that embody either of these two principles and being clear about the role of that particular investment within your portfolio is going to be helpful. So you don't have to choose a single one of these approaches. Now look, there you have it folks, dividend growth versus dividend yield. Hopefully you have a better perspective on some of the benefits and drawbacks of each one of these approaches. If this video is helpful to you, don't forget to hit the subscribe button, and hit me up in the comments down below. Which of these approaches do you prefer? Dividend yield or dividend growth investing? Let me know today. why you select that type of investing approach for you and your family.